Welcome to Charlotte Market Insights, guys, where we are dissecting all of the national headlines in the real estate market and backing it up by data-driven analysis of what's actually happening here in the Charlotte real estate market. If you guys are new to my channel, my name is Brian Taylor. I'm the owner of Dreamline Realty right here in Charlotte, guys. So affordability is the buzzword in 2026. At least apparently that's where it's headed. Everything that we're hearing about in the news is fixed around this affordability idea of trying to fix the housing market. The administration is coming out with some big swings and some big ideas to try to get interest rates lower, to try to get an affordability issue or crisis here in the United States under control. So today we're going to talk about three main pieces of information the administration is rolling out and a promise to do even more at a meeting coming up in a couple weeks in Davos. We're going to talk about new home builders being at their lowest home prices, continuing to slash prices at the lowest place in 4 years. And then I'm going to dive into some Charlotte stats here and show you exactly what's going on around the Charlotte real estate market. So without any further ado, let's dive in here and talk about affordability for a moment, because these are the headlines. So in no particular order, we have this beautiful thing that came out last week. It says Trump says the U.S. to ban large investors from buying houses. Now, guys, this was a major deal back in 2020. Maybe even up until 22, that 2-year time frame. Seemed like every house that went on the market that was priced under $500,000, more than likely 3 to 4, where it's even crazier. But anything in those price ranges that went on the market, we were seeing 4 to 5 different investors coming in with cash offers. It was a big deal. It was stealing the American dream for the first-time home buyer. They just could not compete with these cash offers. So as part of this affordability buzz, this is what came out last week. And I don't necessarily know what this will actually end up doing for the Charlotte real estate market. And I say that because we are not seeing any types of those cash offers and investors coming in here. It's rare that we have seen any type of an investor deal come across the wire over the last 2 years. So I don't know how much of an impact this is going to have now, but it definitely is something the administration is looking into as a way to curb this. Now, Charlotte is a big market for the institutional investors, like Jacksonville, Florida was one, Atlanta's one. There are pockets of cities across the country where this is a bigger deal than others. So we will have to see how this plays out, but I wanted to fact check this because I've been reading into a lot of this, and a lot of people are wondering, number one, is this going to make any big kind of impact? And number two, at the same time, could there be negative impacts from this, right? If these institutional investors are no longer allowed to buy properties to hold and rent, is that going to cause a supply issue on the rental side, and could rents actually start to go up? I don't have the answer to that, but we will soon find out as this thing plays out. Now, once again, these are all ideas at the moment. These things have to be passed through all the legislation in order for these things to come into place. But these are ideas that are being thrown around here. So let's take a look at what this really means from an institutional investor perspective. So if we go over here and take a look at this, it says here, do private equity firms own 20% of single family homes? That is really the question. And part of the conversation comes into, what do you classify as an institutional investor? I have read multiple pieces of this, and the answer to this is saying, fact check, no. They do not own 20% of single family homes. And what I'm pointing out to you is they're saying large institutional investors are defined as those owning over 100 houses. I have read other places where the definition of that is if they own over 1,000 houses. So for the sake of this, let's say the number is 100. So if that was the case, then large institutional investors owning over 100 houses only own 3% of the total single family rental stock across the country. So it does go on to say in the 20 metro areas, though, where I guess they call it metropolitan statistical areas, that is up to 12.4%, but still far less than the 20% that was mentioned here. So I don't know. We'll have to see. I will share with you as we go down through here just a little bit more. It does talk about this number being a little bit higher, but it also says here, considering purchases rather than holdings, investors buying non primary residences brought that number to nearly 27% of all homes sold in 2025. But here's the kicker. However, most of those purchases are likely by small investors, those who own less than 5 properties. So I don't know. We'll have to see where that one shakes out. I personally don't think it's going to be any kind of a major deal unless we start getting back into the craziness of like 2020. And I don't see that. I think we're going to have interest rates way back into the 3% range for that to really become an impact. But hey, drop a comment below. Let me know if you think otherwise. I would love to hear your thoughts on that. So another piece of news that came out this week as well, like literally like 2 days later, we got another piece of information from the administration, and this one is catching all sorts of buzz right here. And I'll show you some mortgage rate stats here in just a second, but you've probably heard this in the news that the administration is convinced to get mortgage rates down. And what they're doing to do that is they are going to suggest that Fannie Mae and Freddie Mac buy $200 billion in mortgage-backed securities. Again, this right now is just an idea, but I really believe this one will come to fruition. And it's a quote here. It says that this will drive mortgage rates down, monthly payments down, and the cost of owning a home becoming more affordable. Instantly after this news was released, mortgage rates did in fact come down to 5.99% the following day. So this, guys, is probably going to be something that is going to come into play. And what I'm going to share with you now is where mortgage rates stand right now. But what I will tell you about this from the research that I've done is a lot of people are saying that this is going to cause interest rates to come down 1/4 to 0.5%, but they're likely not to stay there very long. So the idea is they're going to drive them down, but once the markets normalize because of this news and the buying of these bonds, the markets are going to go back into some normalcy, and rates are probably going to go back up again, but maybe not get back to the level that we were. But when we take a look at where the mortgage rates are today, guys, this is pretty incredible. So when we take a look over here, as of today, we are at 6.07% on that 30-year fixed. We were at 6.01 this morning when I first looked at this, but now I'm in the afternoon recording this. The bond market was off a little bit today, so rates went up just a tick. But the bonds haven't even been bought yet. This is just an idea right now, and we're already seeing the impacts of the lower interest rates here. So if I take you over to just the last, probably the last 7 to 10 days, you can see right here that curve going down. We saw the little increase right here from today. But that is pretty crazy of a drop, and it's likely going to go a little bit farther than that. So stay tuned on that. If you are watching this right now and you have an interest rate in the 7s, as I mentioned, this is likely going to be a short-lived dip. So if refinancing is on your radar, that would be the time to probably do that. If you need my help in talking through that, just get on my calendar. I'll put a link in the description below. Happy to have a conversation with you about all of that. And on the front of new construction, this one here is crazy. As you've watched me on my channel talk about the new home builders offering all of these crazy types of incentives, they're throwing everything at the wall to try to get sales right now, guys. If you are in the market for new construction, that is the place to be, in my opinion. Home prices on new construction have fallen to their lowest levels in 4 years as builders continue to offer these deep discounts. Going through here, it talks about home builders right now. Look at this. The median sales price on a new house that went under contract in October was $393,300, down 8% from a year ago. That is absolutely crazy. It says that this month, 40% of builders reported cutting prices, while 60% reported using sales incentives, such as mortgage rate buydowns and all of these other things, throwing all of it into the deal. Blinds, move-up packages, washers, dryers, refrigerators, everything that you can think of to try to get their house more attractive. And again, as we have just talked about, the word affordability is the main constraint in the housing market, and these builders need to get product sold. So there you go. That is the scoop of what's going on here with the new construction scene. But what I want to do now, guys, I want to take you over to the Charlotte real estate market specifically and show you exactly what's happening over here so you can get a better idea of what is going on as we head into 2026. And I will start off by telling you that the market has been very, very slow. And some of this is seasonality, but some of this is just the economic chatter that's been happening over there for the last few months. People are just sitting on the sidelines waiting to see if home prices continue to come down and if interest rates can continue to come down. So let's dive in and take a look at the first thing we're going to take a look at here is new listings. So for the month of December, now of course all of the data I'm showing you is a month in arrears, but the new listings year over year were down just under 1%. But if we go over and we look, this is what is staggering. That is year over year down 0.8%. But if we go look for December, there was 2,705 new listings in the month of December. But look at this. These are the things that I track. If we go back to July, we had 5,433, call it roughly 5,000. Let me change. I don't know why I did that, but we're going to change it. 5,433 new listings in the month of July. Every single month, that number has decreased. So we did have a period of time where we were seeing more inventory hit the market, but now it has scaled back a little bit. And a lot of it sometimes, especially right now, is seasonality. But one thing that I'll share with you when I share this next slide, there's a reason for some of this inventory to be going away. So let's now shift gears and talk about what we actually have as far as inventory of homes for sale. So again, year over year, up 15.8% in inventory, but the same trend is happening here. If I could take you back to July, in July we had 12,661 houses on the market. And as you can see, we have been on a declining trend, now just at 9,985 houses that are currently on the market, guys. And here's the real deal about what's going on in the housing market as far as inventory goes. Days on the market has increased substantially. I'm going to show you those numbers here in just a second. But what is happening with the mentality of sellers is a lot of people still think that the market is fairly warm and they can get their house sold relatively quickly. They price it, in my opinion, they price their houses too high because I think the market still has some heat. And it does not. This is not 2021 again. Houses are sitting on the market a lot longer. Home sellers are taking price reductions. And what is happening is they are getting discouraged because they're not getting showings, they're not getting offers. And they have just decided to just take it off the market completely and maybe try again in 2026. That is one of the reasons why we're seeing a decrease in inventory. And that also ties back to months of supply when I get to that one as well. So let's shift gears and go back over to the market. So the next thing I want to share with you guys we just talked about, is the days on the market. So here we go. Days on the market is up 20% year over year. That means in December of 2024, days on the market was 50. Now it is up to 60. And as I just talked about, if we go back and look, even back to July was at 44 days on the market. And now we are up to 60. So as I mentioned, things are sitting on the market a lot longer. In this market, if you're a seller, if you want to have any chance of selling your house at a relatively quick pace, you've got to be priced right. You cannot be priced too high. The buyer pool out there is still heavy demand, but buyers are being a lot more particular about what they are spending their money on. So you've got to be priced right. You've got to be in a good location. It's got to be marketed well. And I expect to see this number go up a little bit until we get into the spring market. And speaking of the spring market, I really think that we are going to see, if some of this affordability stuff does stick and rates start coming down below where they're at now, I think we could probably get into the mid fives. I think that is going to unlock some of the inventory. Sellers will probably be thinking about selling. Some of these sellers have maybe a 7% interest rate. They haven't been willing to make a move on anything until rates have come down to maybe in that 5.5% range. I think some of that inventory will get locked. Now, here's an idea that I've read about. Now, this is crazy. Now, think about this. There's no factual data behind this. This is just something that I've been hearing about. It's the idea, and maybe this is something the administration is going to talk about in this meeting in Davos, where they're promising some big swings in addition to what they've already done. What about this idea where if you are a seller and you have a 3% interest rate, you really do want to move, but you don't want to give up that interest rate, which is locking your house off the market as well as millions of others. What if you could take that 3% interest rate, go buy another house, and make your interest rate portable and move it to the new purchase? Wouldn't that be something? Now, maybe that is something that is going to come out as another idea. I don't know. We'll have to see. That's just something that I'm hearing about. So when I hear about these things, I obviously want to share them with you guys, because who knows? Maybe that becomes a thing. But the next data of Charlotte I want to share with you is about percentage of list price received. So I just told you that days on the market has crept up a good bit. And when that happens, sellers are reducing prices typically along the way to make their house, of course, more attractive, to bring in more foot traffic. Percentage of price received is down 0.9% year over year, and that currently sits at 94.3% right now. As you look back to July, it was 95.9% back in July. Now we're down, of course, like I just said, to 94.3. So sellers are getting less than list price for their properties. You know, back in the day, it was very common to get over asking price, and then we hovered around like the 99.5 for a while, and now we're all the way down to 94.3. So it's super important. I'll say it again. I'll always say it. If you're going to price your house in this market to sell, you have to be ready to price it correctly. All right, moving on to months of supply. Months of supply year over year is up 12%. Last year, the month of December, we set at 2.5 months of supply. Now we're up to 2.8. But as I've shown you the trend, if we go back to July, July was at 3.5 months supply, and now we're back down to 2.8. So a large part of that, in my opinion, like I said, is sellers just pulling their houses off the market. They're frustrated, not getting showings, and some of that is in relation here, what ties into the months of supply. All right, so let's take a look at what's going on with prices around Charlotte. I'm going to show you the average sales price. I don't necessarily love this if you followed me for any moment of time, but it is a data point that they throw out there, so it's well worth talking about. So right now, the average sales price in Charlotte is $512,430. That is up 7.7% year over year. And if we go look at what it was in 2024 in December, it was at 475. So if we also go back and look from back in July, July was at 533, 344, and now we're down to 512. So again, as houses sit on the market, price reductions plays into this number. But I don't love this number. I think it's better to look at the median sales price. So that's what we're going to do now. This is more accurate in my opinion. And this one here is up 3.9% from 2024, sitting at a median sales price in Charlotte of $400,000. And crazy enough, that number has held true over the last 3 months. All of those sit at $400,000. I believe when we get the numbers out for January and more than likely February, I'm believing that number is going to drop below $400,000. So that's kind of where my thoughts are on that. But guys, if you are getting any value out of this video, please do me a favor, hit that like button, subscribe to my channel. I'm going to be bringing you a lot more content this year. I did take a little time away, but I'm committed to getting back to you guys with a lot more stuff, diving more into the Charlotte real estate market itself with the data. I put out a series not long ago about price reductions in Charlotte. I hit 3 of the 4 areas. I will be finishing up the 4th one here next week. And I'm going to be bringing you guys some different ways of thinking about the Charlotte real estate market, not as a whole, because the Charlotte real estate market is really many markets built within it. And I love the data. I love to dissect it. So I'm going to bring a little bit of a twist into how to look at some of this stuff, in addition to talking about some of the things that are coming into the area that could affect home prices for certain areas. Those types of things is what I'm looking to do in 2026. So guys, but if you need any help in your home search or want to talk about your situation or whatever the case may be, hop on a Zoom call with me, scan that QR code. There's a link right there in the description to my calendar, or just go to My Call with Brian and hop on my calendar that way, guys. But anyway, drop a comment below. Let me know if you agree with what I said. If you have a different opinion, I would love to hear it. You know, everyone out there is in a different place in their either home buying journey, home selling journey. Everyone has different ways to interpret the market. I'm not saying mine is right by any means, but the way that I see it may be different than yours. So drop a comment below. Let me know what you're thinking. Would love to hear from you. But guys, that's all I got for today. I'll catch you in the next one. And as always, make it a great day.